Okay, so imagine this. You wake up, it's a Tuesday, pretty normal day, right?
Hmm.
And then you hear that publicly traded U.S. firms just announced, get this, $844 million in new crypto investments.
Wow.
Not over weeks or months, in one single day. Just astonishing.
That is quite a headline.
Welcome to the deep dive. Today, we are absolutely plunging into this story. Corporate America's $844 million crypto influx. We're focusing on these really fascinating recent announcements and the companies involved. Pretty surprising mix.
Yeah, that's what immediately jumped out at me, too. It's not just, the big tech names or the crypto native firms we always talk about.
Right.
We're seeing like a really diverse range of industries. I mean, biotech.
Yeah.
Even meal suppliers, as you hinted, making some really substantial commitments.
Exactly. Meal suppliers.
He definitely hints at something bigger, a broader shift, perhaps.
It absolutely feels that way.
Yeah.
So look, our mission for this deep dive is pretty clear. We need to unpack how these companies are pulling off these big investments.
The mechanics.
Yeah, and what exactly are they buying? Is it all Bitcoin or...
Good question.
And maybe most importantly, why does this actually matter to you listening? Whether you're deep in finance, run a business, or are just, curious about where all this is heading.
Absolutely. Context is key.
Okay, let's really unpack this then. As we said, at least 4 publicly traded U.S. firms, a collective $844 million, all announced on one Tuesday.
Yep.
When you see that kind of, that concentration, that sheer volume all at once, what's your first take?
Well, my immediate reaction is that this isn't just companies dipping their toes in anymore. It's not opportunistic dabbling.
Seems more serious.
Exactly. The scale of it and the incredibly tight timing all on one day that signals, I think, a maturing trend.
Okay.
It suggests a more calculated, maybe even strategic commitment from a wider range of businesses.
Yeah.
We're moving beyond just the early adopters.
Right.
This could be, the start of a real shift in how companies think about their treasuries, their balance sheets, maybe even their core strategies.
That's a really strong signal. Okay, let's dive into the first big one. And honestly, this company, it kind of threw me. DDC Enterprise Ltd.
Ah, yes, the meal company.
Yeah, they're based in Hong Kong, selling heat and eat meals. Not exactly the first industry you think of for massive crypto plays, is it?
Not at all. Makes it more intriguing, though.
Totally. But DDC announced the biggest single raise out of this group, a whopping $528 million.
Right.
And they stated very clearly, every dollar is earmarked for expanding their Bitcoin holdings.
$528 million just for Bitcoin. That's ambitious. So how did they raise it? Was it all equity or?
Good question. So they were pretty specific about the funding mix. It came from 3 main sources.
Okay.
A $300 million convertible note.
Right.
A $200 million credit facility. And a smaller $26 million equity investment. So mostly debt and convertible debt.
Interesting structure. And who put up the cash? Any big names?
Yeah, actually. The investors are pretty noteworthy. A Dallas-based firm, Anson Funds, was the largest investor. And also the venture capital arm of Animoca Brands chipped in. Animoca, big in the blockchain gaming and metaverse space.
Right, Animoca. That adds a crypto native angle to the investment side, even if DDC itself isn't.
Exactly. But here's where it gets really interesting, I think. DDC explicitly stated their mission. They want to have the, quote, world's most valuable Bitcoin treasury.
Wow, okay, that's not subtle. They're really planting a flag there. Have they started buying yet?
They have. They made their first move pretty quickly, purchased their first 21 Bitcoin back on May 23rd.
Okay, starting point.
Yeah, it was an exchange for shares deal valued around $2.28 million. But their long-term goal, this is the big one, acquiring 5,000 Bitcoin.
5,000 Bitcoin.
Over the next 3 years.
Okay, and with that $528 million they raised. Let's see, Bitcoin's around, what, $105,000? $106,000 for their calculation example.
Yeah, the figure mentioned was $105,452 as context.
Right, so yeah, $528 million. That actually could get them pretty close to 5,000 BTC, mathematically speaking, if prices stay in that ballpark.
It could.
What's really fascinating here is just the sheer naked ambition. A heat-and-eat meal company aiming to be the world's biggest corporate Bitcoin holder.
It's bold.
It really signals this growing belief, doesn't it? That Bitcoin isn't just for tech firms. It's being seen as a serious, long-term strategic reserve asset, even for, decidedly non-tech businesses.
Yeah. It could potentially reshape how traditional companies think about their treasuries, especially with all the economic uncertainty around.
Completely agree. It's a major statement.
Okay, so that's DDC, the big surprise. Let's pivot now to companies maybe a bit closer to the crypto world, but still making significant Bitcoin moves.
Right.
First up, Fold Holdings, Inc. They actually bill themselves as the first publicly traded Bitcoin financial services firm.
Okay, so they're already in the space. Makes sense they'd want more Bitcoin.
Exactly. Fold announced they secured a $250 million equity purchase facility.
Right.
And the main purpose, buying more Bitcoin.
Okay, so an equity facility. Can you break down how that works, just quickly?
Sure. So this agreement basically lets Fold issue and sell new shares up to $250 million worth whenever they choose.
At their discretion.
At their discretion, yeah. But there's a catch. It's subject to getting SEC approval for a registration statement covering the resale of those shares.
Ah, the regulatory step.
Exactly. And is proved, it would likely be a private placement selling directly to private investors, not a broad public offering.
Got it. So potential access to $250 million for Bitcoin buys pending SEC greenlight.
Precisely. And if they were to deploy that full amount, again, using rough current prices, that could theoretically net them around 2,390 Bitcoin.
Which would be a pretty significant boost to their current holdings. How much do they have now?
They currently hold 1,490 Bitcoin.
Okay, so even using half that facility, say $125 million, would increase their stash by, what, over 1,100 Bitcoin? That's a substantial jump, nearly doubling their holdings.
Yeah, it's significant.
Okay, and you mentioned another Bitcoin-focused company.
Yes, shifting gears slightly to BitMine Immersion Technologies. Their business is renting out Bitcoin mining equipment.
So involved in the infrastructure side.
Right. And they just detailed a $16.3 million Bitcoin purchase.
Okay, smaller scale than Fold or DDC, but still notable. Where did the funds come from?
From proceeds of a recent stock offering they did.
So raising capital and directly converting it to Bitcoin. How much does that bring their total to?
They now hold 154.16 Bitcoin. And they mentioned they bought this latest batch at an average price of about $106,033.
Okay, so if we connect this to the bigger picture, what's BitMine's strategy here? Are they just buying or...
Well, they've stated their strategy is now to increase their Bitcoin holdings using a mix of methods.
Right.
Both through their own self-mining activities and through capital raises like this one, specifically to buy more Bitcoin.
Accumulation focus.
Definitely seems like it. They actually used funds from an earlier offering back on June 6th to make their first big purchase of 100 Bitcoin just a few days later on June 9th. Ah, okay. So this $16.3 million purchase is building on that recent move.
Exactly.
So you see Fold and BitMine, these crypto-native or crypto-adjacent companies, they're basically doubling down using capital markets to load up on Bitcoin as a core treasury asset. It really underscores their conviction in its long-term value, doesn't it?
It absolutely does. Strong belief there. Okay, so we've seen serious Bitcoin conviction, right? From the surprising meal company, DDC, and then from crypto insiders like Fold and BitMine. But what about diversification? Are companies looking beyond just Bitcoin? And this brings us to maybe the most unique story of the bunch, Eyenovia.
Eyenovia. The name sounds familiar, but not for crypto. Biotech, right?
Exactly. NASDAQ-listed biotech. Their main thing is developing digital eye exam technology. So again, another player emerging from a totally different field.
Okay, so what's the crypto play? Not Bitcoin, you hinted.
Definitely not Bitcoin. They unveiled a really distinct move, a $50 million private placement.
Okay.
Specifically to build a reserve for an altcoin, the hyperliquid HYPE token. HYPE token. Okay, that is different. An altcoin treasury strategy from a biotech firm. Wow. Did they make any claims about this?
Oh, yeah. Eyenovia made a pretty bold claim, actually, calling themselves the first U.S. publicly listed company building a long-term strategic treasury, specifically for the HYPE asset.
That's quite specific. So what exactly is hyperliquid in this HYPE token? Why would a biotech company target this one?
Good question. So Hyperliquid, from what we understand, is a decentralized crypto derivatives exchange. It's built on its own Layer 1 blockchain.
Okay, DeFi derivatives platform.
Right. And the HYPE token is apparently central to its ecosystem. It's used for staking, for rewarding active traders via airdrops, and for governance, voting on the protocol's direction.
Got it. So it's integral to that specific DeFi platform. And Eyenovia's plan is to just buy and hold HYPE.
Pretty much. They stated they plan to acquire over 1 million HYPE tokens.
Okay.
Which, at current prices, they valued at about $40.1 million of that $50 million raise. And then they plan to stake these tokens.
Stake them, meaning lock them up to earn rewards, presumably.
Yes. Specifically on Anchorage Digital's crypto platform. So they're not just holding, they're actively participating in the network.
That's another layer of commitment. Are they making any other changes that signal this shift?
Huge changes. They announced they're rebranding the entire company
Rebranding to what?
to Hyperion DeFi, and they'll trade under the ticker HYPD.
Whoa. Okay, so they're going all in.
Right.
From Eyenovia Biotech to Hyperion DeFi. That's a fundamental pivot.
It really is. And they've brought in new leadership, too, named Hansu Young as their chief investment officer, and also put him on the board.
And his role is?
Specifically to spearhead this new crypto strategy.
Makes sense. Any quotes from him about why hyperliquid?
Yes, Young was quoted saying, "We view Hyperliquid as one of the fastest growing, highest revenue generating blockchains in the world." High praise.
Okay, so they see massive potential in that specific ecosystem. But this raises a really important question, doesn't it? We have a traditional biotech company essentially transforming itself to focus on a very specific, arguably niche altcoin and DeFi platform. What does this kind of aggressive pivot tell us? Is it just diversification or something more radical?
That is the million-dollar question, isn't it? Or maybe the $50 million question here. It feels like more than just spreading bets around. Eyenovia's move into Hyperliquid seems almost like they're trying to leverage a specific token ecosystem to completely reimagine their business model, maybe even become a sort of decentralized entity tied to that platform's success.
It's a fascinating take. Like, they're not just investing in crypto, they're trying to become part of a crypto-native system.
Exactly. It could potentially be a blueprint for other companies in, maybe specialized industries looking for totally new revenue streams or models.
But the risks must be enormous.
Oh, absolutely. It highlights the extreme level of due diligence, the risk assessment needed when you step beyond Bitcoin into the, let's face it, much more complex and volatile world of altcoins and DeFi protocols.
Definitely a high-risk, potentially high-reward strategy. Very different from just adding Bitcoin to the balance sheet.
Completely different. Wow, what a set of stories. Okay, so let's just quickly recap the key takeaways from this deep dive.
Yeah, let's pull it together.
We saw this really significant $844 million corporate crypto influx concentrated in time.
Scale and timing.
And involving this surprisingly diverse range of companies, from Heat and Eat Meals with DDC to Biotech with Eyenovia, alongside the more expected crypto players like Fold and BitMine.
That diversity is crucial, yeah.
And the approaches are varied too, right? We saw direct, ambitious Bitcoin accumulation.
Like DDC and Fold.
Strategic altcoin treasuries with staking.
Eyenovia's big pivot.
And all funded through some pretty unique financial mechanisms: convertible notes, credit lines, equity facilities, private placements. It's not simple stuff.
No, it shows real financial engineering going into these moves now. So looking at this whole picture, this complex landscape, what's the big question this leaves us with?
Yeah, what's the thought to chew on?
Well, I think it's this. As we see more and more traditional companies building these bridges into the digital asset space, sometimes in really fundamental ways,
Right.
how might these strategic pivots, whether it's holding Bitcoin or rebranding to Hyperion DeFi, how might they ultimately reshape not just the core businesses of these specific companies, but maybe, more broadly, the entire future landscape of corporate finance itself? What does it mean when the lines blur like this?